All right, let's bring back on Ironhold's Capital founder and CIO, Siddharth Singhai. Welcome back.
Always an honor to join you, Mitch, and thank you for inviting me.
Always. It's good to have you on today. Let's get right into the market. Of course, everyone has been taking their shots on Meta, and I can't blame them, right? It's come down significantly since the high. And now the question really starts beginning. When will the valuation kind of make sense? So my question for you to start off, our question of the day, is Meta a buy at these levels, and why would you think so?
Sure. So I think, what we believe is, if the fundamentals are great and the underlying business does well, then the stock price will take care of itself over the long run. So if we look at Meta, the fundamental problems are, in my view, non-existent. People have a perception that TikTok, for example, is going to be this disruptor of Meta, and short form video content will kill the advertising business. So if you examine the fundamentals, the company has better fundamentals compared to last year. The only thing that has changed is that the demand has fallen off for advertising, and that's the same has happened for Google as well. So that's just a general slowdown in the economy. Engagement rates are up. The number of users using their family of apps, WhatsApp, Instagram, Facebook, they're actually up year on year basis. And so fundamentally, there's nothing really problematic with Meta. As far as valuation is concerned, it's trading for about $225 billion market cap after cash. It has no debt. And if you look at the normalized earnings for Meta, they make about $40 billion a year. So you're getting it for less than 6 times normalized earnings. So, I don't see the TikTok thing as a big problem. What the other concern is that Apple has put on some, greater privacy measures that have sort of, not completely removed, but limited their ability to target customers, right? So one of the great things of running advertising digitally is that you can target people based on zip codes, based on all kinds of metrics, right? You can so that is not possible in print, right? Which is one of the reasons why we see digital advertising taking away so much of the market away from traditional media, newspaper and print, because there's so much wasted circulation. You don't really get to target the people you want. So, you might run an ad for, that's supposed to be seen only by one gender, but because of running it in a newspaper, it's going to be seen by everyone and all age demographics. So, digital marketing is here to stay. It is not a thing of the past, or it's not getting disrupted anytime soon. In fact, it has a tailwind. If you go back 3, 4 years ago, it was about 50% of all advertising spending in the US, digital. Now it's about 75% almost. So I don't think that Meta has any, digital marketing overall has any, headwinds at all. In fact, they might have tailwinds, right? Yes, I don't think it will grow at, the 20+% top line growth it has been growing at for almost a decade now because of the penetration now. You already have 3 billion people on their family of apps, which is incredible. So revenue will slow down, but when you look at a stock trading at 5 times earnings, 6 times earnings, what you're assuming is that not only are they not going to grow, there's going to be a secular decline in the business. A fair valuation for any company that's growing at maybe 1-2% would be 10 times earnings. So I don't think Meta is going to grow at 2%. I think it's going to be in the at least high digits, right? Possibly even 10-12%.
Are you concerned with their spending? Because it seems like that was what a lot of investors brought up the question, was the spending into their, of course, their Meta side and the metaverse side. Are you concerned about their spending there?
Sure. So I think the one thing we must understand is It's not just metaverse. It's they're spending a lot on data centers, which allows them to then pivot to other things as well, right? Right now, it's not clear how you will build the future of artificial intelligence. We don't know what sort of companies are going to be around, and where it is going to be disruptive and then lead to profitable, business, and where it won't be useful. So what Mark Zuckerberg has done by investing in all this data center capability and AI capability is that he's future proofing Meta to a certain extent. In fact, they use AI for recommendations, and that has improved their monetization rate and engagement rates across their Reels platform and overall as well. So,
Perfect.
mhm.
No, perfect on Meta. I think that definitely gives it the case, right? I mean, that's what you need to look at, and I agree with you. If you dive deeper into the financials, you'll see things don't look too bad, right? I think it was more along is the writing on the wall for advertisement, and you said it there. You feel that digital advertising hasn't truly gotten disrupted. It's just going through some ebbs and webs right now, especially with the new kind of policy that's coming out with Apple. So, of course, if they can figure a way around kind of those policies and still find ways to target the consumer in advertising, it seems like things can turn around. Now, let's talk about the leadership. Of course, leadership got really hit hard, whether you're looking at Microsoft, Google, Amazon. What are you seeing from this leadership and their earnings that maybe investors should be concerned about?
Um, so I assume by leadership you mean the upper management, CEOs, and
What I mean by leadership is some are major stocks, some of the
maybe.
leading stocks, of course, like Microsoft, Google, Amazon. What do you see in some of these reports that concerns you, or maybe some of these reports that weren't as bad as many thought?
I think it was expected that you would have a period like this where demand was going to fall off because COVID was an unusual period where all kind of tech companies had pulled forward their demand from the future. So that was obviously going to be unrealistic, for us to expect demand levels to sustain. And also, some of it is part of the natural economic cycle where you're going to have some slowdown. So, absolutely, I think you will see more slowdown, I assume, moving into the next year. But fundamentally, there's really nothing. I can't speak about Microsoft because it's not something that we've done work on. But Google and Meta, if you look at the end demand, that's not going to change that much. And I would assume it's the same for Microsoft. Um, but it's an air pocket, right? Yeah, I don't think it's anything too detrimental.
Definitely. Now, what do you expect from the Fed today? Of course, all eyes are on Jerome Powell today. What do you expect to hear from the FOMC meeting?
Right. I would expect a rate hike. And even last time I discussed that Fed's aim is to always protect inflation and not protect markets. When I say protect inflation, is to control inflation, keep it down to about 2-3%, and they're going to keep hiking rates until they see. And I don't think they're going to go back, even if the inflation cools off a little bit. Because that happened in the 70s. Inflation would cool off, you would ease off on the rate hikes, and it would go up again, right?
Yeah.
So until you see clear signs that 2-3% is the normalized inflation, I think investors should expect rate hikes even beyond this point. Yeah.
Now, where do you think you'll see some opportunities in this market? Do you feel that it's going to come back to growth stocks, or should we kind of be more focused on value stocks? Like you brought in there, kind of the sales numbers there with Meta. Should we be looking at these growth stocks that they'll lead the rally back, or do you see a kind of rotation to value coming into play?
I think so. Stocks like Meta are sort of in between, right? They're
Yeah.
growing rapidly, but the valuations are cheap. So when we say growth stocks, we typically mean money losing companies that haven't figured out their way to profitability yet, but are growing rapidly, top line wise. That's not Meta and that's not Google, because these companies are very profitable. I would actually call them value stocks rather than growth at these valuations. So I think tech sector is going to be great. Now you have to pick your spots. You have to be in the great businesses in the tech sector. But that's going to be, in my view, the most attractive sector for the next 2-3 years even.
Yeah, staying with the leaders, right? And like you said, maybe it's GARP, growth at a reasonable price, right? That could be definitely a good approach to take here. And like you mentioned, some of these big tech companies, it might seem like they're growth companies, but really under the hood, they look more like value companies. Appreciate you coming on, like always, giving us an outlook. And we'll have to see about Meta, right? We'll see if Zuckerberg can turn things around there. Appreciate you coming on today, Siddharth Singhai. We'll definitely have you back on.
My pleasure. Thank you for
Take
inviting
care.
me.